What's going on, y'all? It's Big Facts again, coming at you with another video. So, guys, as you already know, the recent talk of the whole globe, or shouldn't even be the town, the whole globe has been COVID-19, or as we all know, the coronavirus. Now, a lot of people have been talking about, because of the recent moves in the stock market, and have said this is the perfect time to buy. Actually, they've been downplaying the ramifications of COVID-19 and truly why the rest of the globe outside of the United States has taken this such as a serious matter and have actually declared it as a pandemic by the World Health Organization. And it's only here in the United States, and I think based upon due to our leadership by President Trump, where a lot of people haven't seen the severity of it as of recently. Now you go throughout grocery stores everywhere, like water's being out the shelf, toilet paper, cleaning supplies such as, disinfectant wipes, disinfectant sprays. Those are all going out. And people are now starting to stock up on food too as well. However, people still try, because we're in America, people still try to use this as a capitalistic opportunity, as a way to, let's go out and buy stocks, buy the dip, buy the dip, buy the dip. And I'm here to tell you that is a wrong measure of it. Now, they're going to probably call this stock market crash the coronavirus crash. But quite honestly, I think we have already been in a recession. This crash has already started way before coronavirus picked off. That's in my humble opinion. And I'm going to prove that to you guys from this video. I'm going to show you that the stock market crash started before the coronavirus. The coronavirus just accelerated it. All right. So first things first, what you're looking at here is the Dow Jones Industrial Average Index. Now, this index is basically the best barometer showing you the health of the U.S. economy. All right. Now, today, or as of the making of the video, it's on a Saturday, so the markets are closed. Right now, it's at 23,185. So let me log in here. Give me a second. All right. So when you take a look here at the Dow Jones Industrial Average Index, as I stated, pretty big decline from February the 11th, when we were at near all-time highs in the Dow Jones, from February 11th or February 12th, 2020, whichever day you want to go, to a month later, as of March 14th, over a month later, or March 12th, sorry, look at how much we've dropped. Pretty steep decline. And this decline now is somewhere along 28%, close to 30% drop from all-time highs. 30% drop, about almost 30%. Sorry about that. From all-time highs. Look at that. Just take a look at that. Take a look at that. 28% drop. Now, this has actually started way back from about, I want to call it 2018. You guys remember, for those who do follow the market, you guys remember that around December 2018, how the market just dropped. And then from that point in time, what did the U.S. government do? They started to lower interest rates. December 19, 2018, interest rates were at 2.5%. 2.5%. Going forward, when the Federal Reserve next met on July 31st, 2019, what did they do? They dropped it to 2.25%. 2.25% to help rally. In between that time, we heard of repos, the government doing bond buybacks, just basically trying to spur the U.S. economy. Now, from that time period of 2018, if the U.S. economy was as healthy as people claimed it was, why are we dropping interest rates From the last 5 Fed meetings, 1, 2, 3, 4, 5. We've been lowering interest rates and we're going to go lower. If the United States economy is as healthy as they promote, why are we dropping interest rates? That's economics 101, folks. When you're at full employment, we're seeing historic lows unemployment in the United States. Historically low unemployment numbers. If we are at full employment, why are we lowering interest rates? I need to know the reason why. Because all you're going to do is pump up inflation by doing such. And I'm going to show you guys that. Look at the unemployment rate in the country. Record lows, 3.5%. 3.5%. We're damn near close to the macroeconomic goals of 3 to 5% of unemployment. Actually, we are hitting macroeconomic goals. 3.5%, and we're lowering interest rates. Are they crazy? That gives you the underline that the U.S. economy is not strong. It has not been strong. The global economy hasn't. Just take a look at oil prices. Just look at oil. The global economy has been weak. Look at oil, stretching as far back as 2014. Oil has been dropping. It went up again from 2014 when it dropped as low as I think it was $25 a barrel. Then it spiked up again to as high as 77, then dropped. From 2018, that's why I'm telling you, remember this date, remember this video, what I said, 2018 was the start of this recession. 2018, the global economy started to slow down. From this peak right here, I said around $77, oil was trading at for a barrel. It dropped, did a little spike, and it came back down. Just look at this trend. Follow the trend, people. Follow the trend. Oil has been going down. And oil is an indicator on how the world economy is doing. Because that is a lifeline for most economies. Developing nation, emerging markets, they all base themselves off of oil. And look at how it's been going down. Just follow that trend, folks. It has just been going downwards. And now oil's trading around $33.25, and it's going to go even lower. Going to go even lower. Now, people would say, oh, OPEC, blah, 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 Russia and Saudi Arabia haven't. No. Look at the charts. Just look at the charts, folks. Stop listening to the headline news. That's all they want you to do. Is listen to all the fluff, all the things that get you to react. But if you look at the charts and the data, it's all been there that the U.S., the global economy, not just the United States, the global economy has been showing weakness since 2018. 2018, things just started to accelerate because of the coronavirus. All right. Now, going back to the Dow Jones Industrial and why I feel like we haven't even seen the end. People promoting like, oh, this is a perfect time to buy stocks. Look at from our all-time highs back in February till now in March, we've only seen a 28% drop. Okay. So I'm going to call this right here coronavirus. Perfect. All right, so this is a coronavirus. Now, the last recession we had, the financial recession that took place, the financial crisis that took place back in 07 through 09, look at the drop there. From all-time highs in the market, look at the drop there. 54, read it and weep. Not lying here. 54.18%. More than half. More than half. And actually, I got to stretch this. There we go. Just a little bit up. Oop. Sorry about that, guys. I'm making this video. 54.34, percent. More than half of the market dropped. More than half. More than half, 54%. compared to coronavirus 28.3%. So we haven't even seen the bottom. Not even close. Not even close. This was the housing recession. 54%. Okay? 54%. And when you look at the United States here, as we already seen, airlines, the airline industry has already taken a hit. Let's see. Airline industry is taking a hit. Schools shutting down. All of this is telltale signs that, folks, we're in a deepening recession and it's only going to get worse. All right. Just look at the airline index. Now, airline industry, that's actually the first indicator to show you the strength of the global economy. And that has already been showing weakness for quite some time. People just haven't been hip to it. Once again, like I said, look at 2018. From 2018, just follow the trend, people. Just look at the trend. 2018 till now. Boom. Look at that. 2018. We have not met the highs from 2018. Airline industry has been going down. Had a little drop. We were in a sideways market, which is already, whenever we're in a sideways market like that, that's an indication we're going down. Whenever you see the sideways like that, we're going down. All right. From all-time highs, we drop down to sideways. We're going further down. Look at that. 2018 was the start of this, not the coronavirus. Coronavirus just accelerated things. All right. This is the airline industry. Airline index. And you're telling me now this is the best time to pump money, buy low, buy the dip? No, we're going to go even lower. We haven't seen anything yet compared to like with the drops that we were seeing in 2008. Look at this. Look at that steep drop right there. Follow the trend, people. Look at the steep drop that we've seen. That is not comparable at all. So we haven't seen anything yet. And with all the money from quantitative easing, the lowering of the interest rates, everything that's been going on, oh, this is going to be a pretty huge one. Now look at U.S. inflation numbers. Right here, this is monthly U.S. CPI inflation numbers. It has been going up. Been going up. Let's just even start right here from September of last year. September of last year, monthly inflation number was 1.7, went up to 1.76, 2, 2.28, 2.48. Then we had a drop right here in February, but it's going to go up as interest rates have been dropped and the U.S. economy or the U.S. government's trying to stabilize the economy. It's going to go up. It's going to go up. And I mean, this is very, very, I mean, this is a telltale sign of like, man, I don't know how long this economy will continue to drop, but this is not the perfect time to be buying stocks at all. At all. You will blow your ass. You would just wipe out your account. Now, people will talk about dollar cost averaging, but how? When you don't even know when the bottom is. You don't even know when things are going to turn up. And we haven't even hit into the summer. And as schools, airline industries take a hit, the minute they shut down retail, people have noticed, why haven't they shut down malls or restaurants? The minute they shut that down, and the United States is a service-based economy, where more than 77% of our economy relies on consumers, relies on people consuming. When people can't go to malls and shop, and people can't go to work at those malls and shop and stuff, just look at what's going to happen to the economy. It's going to drop even further down. That's the only reason why they're keeping those centers still open. Because economists and people know that, hey, if they shut down malls, they shut down retail shopping centers, people are going to go into a deeper frenzy and panic. And the economy is just going to tank even further. Tank even further. People got to take this serious. People really have to take this stuff serious. Just look at our debt to GDP. Just look at our debt to GDP numbers. It's rising. It has been rising since around 2017, 2018. 104.8, 105.5, 106.9%. 106.9%, and it's only going to continue to rise. Our debt to GDP. This is crazy, folks. And if we're not producing, the world is not consuming, we're the largest consumers of the world, this is going to take a huge toll on the government because they have to kick in the auto stabilizers, unemployment checks from people not going to work and people being laid off just so that they can meet their necessities. And if the government doesn't do that, that's a threat to national security. We're going to have a free-for-all, people looting all over the streets, rioting, fighting, just to survive. That's the times we live in, folks. That is why the coronavirus should not be downplayed. People are talking about it's just the flu. It's more than just the flu because people have to look at the economic ramifications of this all. Now look at this right here. The coronavirus. This is on a website on ArcGIS. Somebody made this, showing you the numbers. And these numbers have been rising of the total confirmed cases worldwide. They have been rising. People have to take this stuff serious. I don't know why anybody would think this is a game and not understand the ramifications of this. Yesterday, there was 135 total confirmed cases. That was yesterday. This morning when I woke up and I started to make this video, 153,511 globally confirmed cases. And the death numbers have continued to rise. Yes, the recoveries, but I want people to look at the charts. Look at the charts, folk. Look at the data. Just look at the charts. In China, mainland China, they've had this under control. It's starting to plateau out. Okay? It's starting to plateau out. The total recovery numbers are starting to rise. But look at in other locations of the world. Look at the spike we had here from March 12th to the next day. Look at the spike from 47,000 spiked up to 63, showing you we don't even have enough test kits going around. We don't even know how many people may actually have this stuff. That is why it's of a concern. We haven't even plateaued out in the rest of the world the way China has. And they've been dealing with this since about December, I believe. So this is of major concern. U.S. numbers continue to rise. 2,488 confirmed cases in the U.S. When in March 9th, people were running around, there's only 90,000 confirmed cases. There's about 9,000 confirmed cases. Look at this. Look at this, 2,488. This is serious, folks. This is serious. People have to understand, yes, eventually we will have a vaccine for this in a year's time. But people have to look at the economic ramifications of this all because this can set the economy back for years. It's already telling on our already telling on our public health infrastructure in this country, and healthcare in this country is already weak and lacking. And this is just already putting this on display, full display. But this will also show you how weak the U.S. economy has been for the last couple of years. But I want to hear what y'all have to say. Like, comment, and subscribe down below. I'm out.